School of Management Studies IGNOU presents an audiobook on the course MMPC 003 Business Environment for MBA program. Presenting Block 3 Structural Reforms, Unit 9 Financial Sector and Fiscal Sector Reforms, Part 2. Reforms in the insurance sector. To provide a universal social security system, especially to the underprivileged and the poor population of the country, the three major schemes were launched in 2015, namely Pradhan Mantri Suraksha Bima Yojana, Atal Pension Yojana, and Pradhan Mantri Jeevan Jyoti Bima Yojana. We shall study some details about these schemes in the upcoming sections. Pradhan Mantri Suraksha Bima Yojana, that is PMSBY. The scheme provides for coverage of Rs 2 lakh for accidental death and permanent total disability and Rs 1 lakh for partial disability. The renewal of 1 year accidental death cum disability cover is available to account holders in the age group of 18 to 70 years. The premium of Rs 12 per annum is deducted from the bank account through the auto debit facility in one installment. As of April 2021, cumulative gross enrollment by banks in PMSBY stood at 23.36 crores. Over 45,600 claims were disbursed under this scheme. Pradhan Mantri Jeevan Jyoti Bima Yojana, that is PMJJBY. This scheme offers a renewable 1-year term life cover of Rs 2 lakh to all subscribing bank account holders. The subscribers can be in the age group of 18 to 50 years. PMJJBY is offered by Life Insurance Corporation, that is LIC, and all other life insurers. A premium of Rs 330 per annum is auto-debited in one installment from the subscriber's bank account. As of April 2021, cumulative gross enrollment by banks in PMJJBY stood at 10.32 crores. Over 2,39,000 claims were disbursed under this scheme. Atal Pension Yojana APY. In 2015, the government introduced Atal Pension Yojana, that is APY, to provide pension especially to people engaged in the unorganized sector like gardeners, maids, etc. APY replaces the previous Swavalamban Yojana. This scheme provides a defined pension depending upon the contribution and its period. The subscribers are subjected to the minimum pension of Rs 1,000, 2,000, 3,000, 4,000 or 5,000 per month from the age of 60 years, contingent upon the contribution by the subscribers and the age at the time of joining the scheme. The spouse of the contributor in the case of death and nominee in case of death of both the contributor and spouse can claim pension or paid the accumulated corpus. The central government co-contributes 50% of the total contribution subjected to a maximum of Rs 1,000 per annum to each subscriber's account for a period of 5 years, that is from financial year 2015-16 to 2019-20. To avail the benefit of the scheme, the subscriber should not be a part of other social security schemes like EPF or be paying income taxes. As of April 2021, a total number of 304.33 lakh people have enrolled under Atal Pension Yojana. Ayushman Bharat. This scheme was launched on the recommendation of the National Health Policy 2017 to achieve the universal health coverage, that is UHC. Ayushman Bharat scheme is launched to meet Sustainable Development Goals, that is SDGs, and its commitment of leave no one behind. This scheme has two interrelated components, namely Health and Wellness Centers, that is HWCs, and Pradhan Mantri Jan Arogya Yojana, that is PMJAY. Health and Wellness Centers, that is HWCs. These centers were developed to cater to the primary health care need of the citizens in their respective areas. A large number of services related to reproductive, maternal, newborn, communicable diseases, ENT, ophthalmology, and others are to be provided in these centers so that people need not run to nearby towns or cities, ultimately leading to saving of both time, energy, and money. Pradhan Mantri Jan Arogya Yojana, that is PMJAY. It was launched in 2018 in Jharkhand by Honorable Prime Minister. It is the largest public health insurance scheme in the world, aiming to provide Swasthya Suraksha to nearly 10.74 crore poor people and vulnerable families as per the socio-economic caste census 2011 and the beneficiaries of Rashtriya Swasthya Bima Yojana. The scheme provides a cover of Rs 5 lakh per family per year for medical and hospitalization expenses in most of the secondary and tertiary hospitals. 3 days of pre-hospitalization and 15 days post-hospitalization expenses are covered under this, and all pre-existing diseases are covered from day 1 onwards. In 2020, according to National Health Authority, cashless treatments of nearly Rs 15,500 crore was provided under Ayushman Bharat PMJAY. Tax Reforms 1991. The Government of India has appointed many committees to suggest measures in both the direct and indirect taxation system of the country. Chelia Committee 1991. To examine the structure of both direct and indirect taxes, a tax reform committee under the chairmanship of Dr. Raja J. Chelia was constituted in 1991. The main task of the committee was to give suggestions on ways to improve the elasticity of direct and indirect taxes, making the taxation system broad-based and fair. Rationalization of the direct taxes and improving equity to identify new areas for taxation and methods of improving tax compliance and strengthening enforcement. The committee made certain recommendations, and most of these suggestions were incorporated in the budget of 1993-94. Kelkar Committee. In 2002, a task force under the chairmanship of Dr. Vijay Kelkar was constituted to recommend measures for simplification and rationalization of direct and indirect taxes. The committee recommended formulating a simple, effective, and better tax system. For direct tax, the recommendations were related to raising the exemption limit of personal income tax, abolition of wealth tax, long-term capital gain tax, etc. Further, widening of the tax base, expansion in the coverage of service tax, etc. were the recommendations for indirect taxes. Kelkar Committee on Fiscal Consolidation. In August 2012, a committee was constituted under the chairmanship of Dr. Vijay Kelkar to outline a roadmap for fiscal consolidation. The main reason behind constituting the committee was that in 2012-13, the fiscal deficit was soaring high and it was estimated to reach 6.1% of GDP, and a higher fiscal deficit is a cause of worry for the economy, which could lead to higher inflation. The external balance could widen, investment, growth, and employment tend to weaken, and the overall confidence of investor is shaken. Direct tax reforms. Direct taxes are those taxes in which the impact and incidence of the tax fall on the same person. Examples are income tax, corporation tax, etc. A series of reforms have been introduced in the direct taxes. Changes in direct and indirect tax in Union Budget 2021-22. In Union Budget 2021-22, the Finance Minister has proposed the major changes and reforms in the direct and indirect taxes. Fiscal sector reforms. Goods and Service Tax, that is GST. In India, the Constitution of India gives the power both to the state and central government to levy taxes. Central government levies tax like custom duty, central sales tax, etc., and state government levies taxes like value-added tax, that is VAT. There was a large number of multiple taxes at various levels of the supply chain levied by both center and state government that led to a complex structure of the indirect taxes. The cascading of taxes, which is due to the tax on tax, ultimately inflate the price of the goods and services artificially, and the ultimate burden of these indirect taxes fall on consumers. This set of multiple taxes with different tax bases and tax rates are also costly to administer and comply with. So it was decided to have one comprehensive indirect tax or consumption-based tax, namely Goods and Service Tax, that is GST. The concept of GST was introduced in the year 2000. A task force on fiscal responsibility and budget management was formed in 2003, and it recommended the introduction of GST in 2004. However, it came into effect by 101st Amendment to the Constitution of India from 1st July 2017. The motto of GST is One Tax, One Market and One Nation. With the implementation of GST, large number of indirect taxes were subsumed into it. GST replaced the taxes levied and collected by the center, namely service tax, central excise duty, duties of excise on medicinal and toilet preparations, additional duties of excise, that is, goods of special importance and textile products, additional duties of customs, special additional duty of customs, and cesses and surcharges related to supply of goods and services. State taxes like state value-added tax, that is VAT, central states tax, purchase tax, luxury tax, entry tax, taxes on advertisements, entertainment tax, and amusement tax, except those levied by the local bodies, state cesses, and surcharges on supply of goods and services. Salient features of GST. GST is applicable on supply of goods or services as against manufacture of goods or on sale of goods or provision of services. It is a destination-based consumption tax. It is a dual GST, namely Central GST, that is CGST, and State GST, that is SGST. CGST is levied by central government and SGST is levied by state government. An integrated GST or IGST is levied on the interstate supply of goods or services. IGST is levied and collected by central government and is divided among the union and the states on the recommendation of the GST Council. At present, there are 4 rates of GST, namely 5%, 12%, 18% and 28%. Some of the items which are exempted from GST are alcohol for human consumption. Similarly, petrol, high-speed diesel, supply of petroleum crude, natural gas and aviation turbine fuel and electricity are kept outside GST. GST Council. GST Council Act has a provision for the GST Council, which is an apex committee on GST matters. The composition of the members includes the chairman of the council, which is the Union Finance Minister, the Union Minister of State in charge of Revenue or Finance, one member from each state who is the Minister in charge of Finance or Taxation or any other member. The Vice Chairman is elected among these members of the state. The Secretary of the Revenue Department is the ex officio Secretary and the Chairperson of the Central Board of Excise and Customs is the permanent invitee in the GST but has no voting right. deciding on the threshold limit below which services and goods will be exempted from GST. Details of services and goods that will be subjected to GST or will be exempted. Making special provisions to special category states, namely Jammu and Kashmir, Himachal Pradesh, Arunachal Pradesh, Assam, Mizoram, Nagaland, Manipur, Meghalaya, Sikkim, Tripura, and Uttarakhand. Model IGST laws, principles of levy, apportionment of IGST, and the principles that govern the places of supply. Any special rate or rates for a specified period to raise additional resources during a disaster or natural calamity, and any other matter relating to GST. All these are matters decided by GST Council. Input tax credit. Input tax credit refers to the tax which was already paid by the seller or manufacturer at the time of purchase of goods or service, and which is available as a deduction from the tax payable, or the seller can reduce or deduct the tax which they already paid on inputs at the time of paying tax on output. For example, seller A bought the goods of amount Rs 18,000 and these goods attract GST at 18%, so the GST amount is Rs 3,240. Now seller A sold these goods for Rs 22,000 and this attracts GST at 18% or Rs 3,960. In this case, the net GST payable will be Rs 3,960 minus Rs 3,240, which is equal to Rs 720, and the input tax credit is Rs 3,240. GST Network or GSTN. GSTN is a non-profit, non-government organization and manages the entire information and technology system of the GST portal. Taxpayers file their tax returns through this portal and the government can track every financial transaction through GSTN. Advantages of GST. Some of the benefits which can accrue due to GST are the creation of a unified common national market for India and boosting the Make in India campaign. Apart from this, there is elimination of multiple taxes and mitigating the cascading of taxes, harmonization of laws and rates of taxes. Also, there is an evolution of simple tax regime, increase in ease of doing business, reduction in the prices of goods in the long run, benefiting the customers. According to Economic Survey 2021, the government received GST revenue worth Rs 1.15 lakh crore in December 2020, along with the ongoing pandemic of COVID-19. Now let's summarize the unit. In this unit, we studied the financial and fiscal sector reforms which were introduced as part of NEP. Within the financial sector, banking sector reforms initiated on the recommendation of the Narasimhan Committee were of much importance. These reforms overhauled the financial sector in general and the banking sector in particular. Post-1991 reform period, reforms in the banking and insurance sector have focused on expediting the insolvency resolution process, and a maximum time limit has been imposed to finalize these processes. RBI can now have more supervision on the functioning of cooperative banks. The cooperative banks can now float shares and debentures and work more efficiently. Schemes like PMSBY, PMJJBY, and APY seek to cover the unbanked proportion of the population and aims to bring them under the ambit of formal basic banking and insurance services. These schemes aim at extending the net of social security to the vulnerable workers and sections of society, along with the provision of health facility in the nearby primary health centers. The Taxation Reforms 1991 attempted to make taxation broad-based and increasing the compliance mechanism. Recently, the introduction of GST attempted to overhaul the existing indirect tax regime in the country, which was plagued with multiple taxes, and that led to an artificial increase in the prices. GST has opened up entire India as a single market with easing the movement of goods across states. Since its introduction, this system has shown many encouraging results in the form of an increase in tax collection and revenue. You were listening to the audiobook by the School of Management Studies IGNOU for MBA program. Course code MMPC 002 Human Resource Management. Course Coordinator Professor Nayantara Padhi from School of Management Studies IGNOU. Voiceover by Harpreet Kaur. Edited by Jagbandhu Jana. Program assisted by Tarannum Jahan. Program produced by Dr. Manoj Kumar Singh. This program was brought to you by Electronic Media Production Center of Indira Gandhi National Open University.